Hey, good evening, or good morning, good evening, good afternoon, from wherever you're watching. I'm about to start a stream soon, so stick with me, and I'll be right here on the trading view. So, what you guys been doing? Everyone's doing okay. So lately, trading, the trading days have been off lately. It hasn't been the best really. So I just want to throw that out there. Just gonna quickly the trading view should come up right now. It's been a long time since we've traded very well. So I just want to put that out there. Hopefully, we can get back to our usual habits. Sorry for the delay, most especially. I've been off. I've been trying to work on the charts personally. I haven't been able to trade like live. I haven't been able to. Let me cut the music off. I haven't been able to trade like on a consistent basis. That's all I'm about to say, and that's not good enough. At least I just want to try and do 30 minutes every day. If I can be 1 hour, try to do 30 minutes every day just to look at the charts and get through. So also also learned a new strategy for forex, most especially. It works for most of them, but I just learned a new strategy from my mentor, not my mentor personally, but someone I looked at as a mentor. Let me just write his name here so you guys can see it. I'm gonna put it in. Let me see if I can put it in a rectangle and just highlight his name. I can't. Oh, but this is his name right here, TJR. I just popped on his channel when I was on live, and I just said that okay, let me just see what he has to offer, and he really helped me throughout the couple of weeks. So that's what I've been trading with. I'm not sponsored by him, but it's just a recommendation I'm giving out to people that want to start. I might just leave it in the chat box. His name, man. So I'm just gonna put it in the chat box. So I'm just gonna put it in the chat box. Hopefully you guys can see it. I just upload it on Twitch, Kick as well. So yeah, that's the whole point of today. So today we're just gonna work on the charts as usual. I just wanna quickly Okay, um, so for his strategy that he taught me was that mostly we just have to know the things that we're doing while trading. It's not you have to always put the you don't have always have to put the indicators, stuff like that. They're good for people who want to trade, but it's not like you have to put your whole screen, make it filled up with indicators and all that kind of stuff. You just have to know the technical analysis. So today, I just want to quickly check the news, the calendar for today. I'm just gonna go on Forex Factory. Hopefully, you guys can see it. Should be up around. Okay, so Forex Factory here. So right now we have we're looking at the GPUSD right now. So we have this is high impact. The government speaks high impact. High impact to tomorrow. Non-farm employment change. This is a big thing. This is a big thing because of the forecast. That's how I know it's a big thing. So those are the things that I just want to point out today. That's on Friday. Let's see Thursday today. Bank rate, the high impact. So yeah, I think I'm gonna might lay off the GP today, but I'm still gonna look at it and see what things that's gonna happen. We go into my also they say bank rate reduced to 4.5%. Says monetary policy meet to inflation target. So basically, everyone is going long, right? So basically, what is really gonna happen is that the pound dollar is now moving up. It's like it's been up and down lately. You know, with the deep seek AI, with the tariff, so everything is not like you can't expect the ATR to be high, the volatility to be high what this trading week. So that's what I just want to point out today. So his strategy was that I should go to the weekly time frame. I'm gonna restart said chart view. So this is our weekly time frame for the pound dollar. If you guys have any comments, any questions, just let me know. So I just wanna I wanna remove these drawings right here. I'm gonna remove these drawings. So also ignore the support resistance. Let me just clear the support resistance. No, I'm gonna just leave the support resistance. So what he said was basically that we should look for the highs and low of the previous week. So right now we know the week is about to end, but we're still gonna go on to the previous week. So we just put a high and a low on this on the previous week. So I just wanna zoom in a little bit. Just go high and low. So the way you know high and low is if you know how. Let me show you what he means by high and low. So a high and low is basically simple, really. Go. No, let me use path to describe it. This is a high. You go up, but when you come down, this becomes the high. And when you go back up, this becomes the low. So a high and a low. So with that path, it becomes an uptrend. Does that make sense? So we just look for the low, the high. So low and high. So that's how lows highs are formed. It's an opposite change in the movement. So those are how in the downtrend, those are the same thing. You move down, it becomes it goes like this. If you go here, this becomes the low. Now this becomes the high. So as it moves like that, that's how the pound goes and it goes into a downtrend. Sorry, mom, I didn't take our class seriously. Um, yeah. If it goes like this, up, like goes a little bit down like this, then comes back up, it's still in an uptrend, but you can't classify this as a low because it's still a little bit in between them. But if you have something like this is more significant than this. So you can say this is a low, this is a high, and this is a low. So those are two things I just wanted to point out here. So we have a high for previous week. So also we want a high. It doesn't have to be perfect here. You just want to mark it out. So it's still gonna go down on the daily time frame. So this is the daily time frame here. You can see that on the daily time frame, this was the whole of last week. The whole of last week went like this. Strong move down. We knew this was bearish, but the buyers had to fight it back off so it can stay in this lane. So this is supposedly how your, let me see, your support resistance must be. But just, I just want to get a point here. So we know that it's gonna be here. So I just want to shift this all the way up here, so it's like more distinct. Okay. Second thing I also want to say point out today is the is liquidity. Liquidity is basically let me get my marker. Liquidity is basically here. All these orders, like when you place an order for, let's say we or prices at this point, right? We know that people already placed buy stop limits. No, buy limits are. You already placed buy limit orders right here. So once price comes down here, expect it to go back up, right? So that's when the people who controlled the whole market decide that no, since a lot of people placed a lot of orders here, we just want to make it go down. So if I place the buy limit order right here in this blue line right here, my stop loss will be around here, right? Supposedly my stop loss is supposed to be here. So if the people who control the market decide that, oh, since a lot of people place buy limit orders here and they'll put their stop loss here, we're gonna make them take them out of the whole trade. They want it to go further than it's supposed to be. You just want to get more than what it's like. They're greedy. They just want more than they can chew. They want to bite off more than they can chew. So what they're gonna do is here's their stop loss here. If your stop loss here and your buy limit order is here, they're gonna make sure that they come around here. Then they just go for the bullish move right here. So it's like a home run for them. So they can get a lot of liquidity right here. Um, can get a lot of liquidity. So imagine, okay, so it's a lot going on right now, but let me see if I can use the trend lines. So imagine we had our buy limit order here, right? We had a stop loss here. Let me mark it out. Buy limit order here, stop loss here. So people that are running the market just come and say, okay, we're gonna place our stop limit order right here. We're gonna come here and put liquidity over here. So when they come and shoot for the home run, they're gonna make at least 438 pips. So that's what they're aiming for. They're aiming for more than they can chew. I say, for instance, they just can come and say, okay, we want to start here. They don't want to get 359 when they can get 400 or something, if that makes sense. So they just want to bite off more than they can chew. Hopefully that makes sense going into this. So I just want to put out this, show you where I can show you the liquidity. Because this is a high time frame, you can't see it, but it's going to be more distinct compared to the 1 hour and 15-minute time frame. So I just want to go to the 1 hour and show you there's a lot of liquidity right here. So starting off, let me start off with this one. Close this one here. We have our high right here. So if I have a high right here, We know this is a high because it goes up, down. So right here, this tiny spot right here is gonna be our liquidity. You can already see that they're pushing for this because we know that from here you can see a breaker structure right here, right here. Basically, all a breaker structure is that the next candle closes below this previous low. That's a breaker structure. So right here, we know that the bullish candle closes here, and this was the low of the previous candle. So we know it's a breaker structure. So since the breaker structure is going to move in another direction, so before it was in an uptrend, as you can see, moves in the uptrend. Now it's going to move in the downtrend now. So that's how you identify breaker structure from liquidity. So that's a good example of breaker structure. Oh no, going now to the next one. Okay, see one right here. I want to show you this one. Where's my? We have a low right here. You can see that price moved down a little bit. So that's what I'm talking about. People already placed their buy limit orders right here, right? So once they placed it right here, they're gonna come down here. People that run the market come down here to this low and just shoot up. So from here, we know that it's gonna be a breaker structure because right here, here's my right market close here. Well, for mostly for breaker structures, I want you to always choose the most recent high or low. Because if you choose a low or high that's further from it, it's gonna be not quite what you're looking for. Like this one was the most recent high because this is bigger. This candle wick was bigger than two of these. So if it was here, we can see market closed right here, right? So we know that's gonna move in an uptrend. I just want to show you a lot of liquidity right now. You have this one for instance too. Market went here. Market went bullish here. Had a breaker structure here. No, I had the liquidity right here. So the sweep just swept it right down here. We could have entered the trade here once we saw that market closed here. Like something like this, I won't be too sure until here because we can see that. I'm gonna show you on the trade. Market closed about the same thing to the low. I want something that is gonna close distinctively under the low of the previous candle, if that makes sense. So I will probably move all my trade right here and make sure it close here. Then from here, I'll just enter short to place our stop loss about here. This liquidity and go to. Right. So we hit the trade after 6 days. This because it's on the 1 hour time frame. This is supposed to be more distinctively on the lower time frame. So I'm not gonna erase this. I'm just gonna go to the lower time frame, let's say 15 minute, and show you this. See, see how long it took for this trade to go in. And this was a 2-to-1. So it comes to show you that it works, but you have to be one, patient, two, you also have to watch for economic news, and three, you also have to watch for different things. It's not only on the GDP to USD that it works. I'm also gonna show you on the other charts. I'm gonna head out to Finviz, head over to Finviz to show you what's up for today. So we're on Finviz right now. We're going for the dollar. So we see that USD JP yen is up today, really up today. That's what I'm gonna go for today. All of this is relative to USD. So USD is gonna be in front of USD compared to the yen. So we're gonna go in front right here. USD JPY right here. So we're gonna do the same thing that I just said right now. Wait, quickly before I'll explain the fair value gap in the JPY one, USD JPY. So first thing we do, I'm gonna go to the weekly chart. Go over here, weekly charts. We mark out the highs and lows of the previous week. Zoom in. Highs and lows, highs and lows. This was the previous week. Go to the daily time frame to confirm this. You see that market just went up and down in this area, but just when it puts back down. Does that make sense? Go to the 4 hour. We see if you can see mark any more lows. Do we see any more lows? I see this one. This is a big low. Mark any more lows. Yeah, I think that's good. This is this is a liquidity sweep right here. If you guys didn't recognize it, this is one right here. Market went above this, swept all the way down. So the thing like you need to watch out. It'll come the more you practice. So I advise people to practice more and more and more on the charts. Okay, so this is a no, I want to do the 1 hour time frame. So this is a 1 hour time frame, right? We have market just moving in consolidation in this range, then just shooting right down. What made this shoot down? I want to go before that. We see that that market went all the way down. I retested, went back up, came back down, retested again, came back up. So right here, this consolidation zone, this is the main point of that I want to show you guys right here. This zone right here. We see from here that market came up. There was a gap. The gap is what I want to show you right now. It's the gap that I really want to show you right now. Right here, right here. We see that market had, hold on. Market came right here, was in the uptrend, right? Then suddenly it had a big move up. So this big move up is what I really want to point out to you today. This big move up right here, we had market this high right here and this high right here and this low, sorry. These two, this space in between represents the imbalance. It means that there's no balance in the market. So because there's no balance in the market has to come and balance itself. So it's gonna eventually stop right here and do a make a reversal and come back down. I wanna do the trend line. See, if I draw a rectangle right here, draw it all the way down to the top of this, we see that market comes back and retest this. Market goes down, though. Usually in the fair value gap. I want to show you another one with the market going up. The fair value gap, market is supposed to come retest in this zone and just move back in the original direction. But right here we can see that it had an inverse movement. So we can say that this is the correct movement that's gonna take. So market comes back up, retest this again, and just goes back down. That's how we saw this. We didn't use any liquidity sweep. We didn't use any. It's just basic common analysis. If you don't believe or feel like I just guessed on this, okay, I'm gonna show you another one. Market did retest. So what I'll usually do is I'll just wait for market to retest right here. Retest, come back to the fair value gap box here. Once it comes back down, once I see that it enters right here, I'm just gonna enter and just go all the way down. Take it all the way down. So at the close of this, so at the close of this, if I went short, 2 to 1. Stop now here. 2 to 1. I'll take it. My first take profit will be here. Second take profit will be here. Take it all the way. Take it all the way 2 to 1. So I'm gonna show you another fair value gap if you guys don't believe. There's always gonna be balance in the market. Always gonna be. So you have another one right here. Okay, no. We have another inverse. I wanna show you the inverse first, then show you the next one. So in the inverse one, like just how we saw before, we do the low of the previous candle and the high of this candle. You see that this place is where the imbalance is. Drag it all the way out. We see that market comes with an inverse candle right here. So if we see this inverse candle, we know that market is gonna go in the other direction, right? This isn't proof, a lot of proof to show you that market is gonna go up, but hopefully you can see it. Market comes, retests a lot, it finally decides to go up. This isn't a good example. It's a good example, but it's not something you will understand. I'll need more proof to back this up. So what I'll do is that I'll wait. If I was to trade this, come here, fair value gap right here. After the first retest, I see market goes down. I look at it. I wait for it. Market goes all the way down. I see a low right here. What do we say about lows? I mean, liquidity. So right here, people place their order limits right here. They place their stop loss right here. People won't run the market. Come right here and just move up all the way. So once I see this up, I wait for a breaker structure. Wait for a breaker structure right here. Breaker structure right here. You see that market closes above this. We just go all the way. Once we see market comes in, we just go all the way. So we go long. We're gonna go long here at the close of this, so at the open of this, go all the way to 1. Placing our stop loss here. We're gonna place our stop loss here. It could actually go 3 because what my tip on placing stop loss right now is when you can see the when you can see the liquidity, you can place a higher risk. That's my tip on it. When you can see the liquidity, you can place a higher risk. Let me just type that out. The liquidity. So that's what I'm gonna say. When you can see the liquidity volume, you can get a larger reward. So that's because I saw this candle was just looking at me, just had have me. So we just hit a 3 to 1, easy 3 to 1, and we did that. This is on the hour time frame, so it's gonna be more distinct compared to the lower time frame. But I just wanna see if people can understand. So this is a day. Took a day to go in. So I'm just gonna go on the 15 minutes to show you how this looks like. Okay, so I can see a fair value gap here right now. I'm gonna look for the fair value gap that goes down. Okay, this is a really good example of fair value gap right here. You see the market come here, low, high. Market comes and retest right here. This is a good example of the same direction. So if we see that market comes, it has to retest, remember. Goes all the way down, picks it back up, moves back in this and retest right here. From what I know, is that we know that market is gonna go back up. Why? Because right here, it had a strong move up and it's gonna have a strong move down. So from that strong move up, it's indicating that it's going to go back up. And also, we also see the liquidity. Wait, I think it's the same one we traded. Yeah, it might be the same one we traded. Yeah, it's the same thing. It's the same thing we just did. Trying to find the same direction liquidity. Yeah, I think that's it now. Okay, I think I found it. I think that should be good. Oh, yeah. Mm. Okay, I think I can use this as an example. I'm gonna use that as an example. Same thing for fair value gap. One more thing. Right here. The low of this, high of that. Drag it out a little bit. See that market comes and retest again. Goes down, picks it back up. Picks it back up one more time. Just zooms all the way down. This first candle comes back up these blocks. And so once I see this enters, I know that it's gonna go down. Might not per se, because I'm gonna back it up with this liquidity sweep right here. This see market comes all the way down, so we see that it's gonna go all the way down. So this is liquidity, and the sweep is when it goes all the way down. So I want to enter all the way here. Could have entered here at the open of this. No, here. Because I had to let it close. Okay, I will probably enter the same place. I'll have entered at the beginning of this trade here. No, here. Where is it? Probably entered here. Beginning of this trade. So the bigger the liquidity, bigger the trade. So I'm gonna go three. Place my stop loss here. I could place it here or look. I'll place here because I'm sure. The big three. Big three. Did we get stopped out? No, we didn't. We didn't get stopped out. How long did it take though? It's a while. It took a while before it got in. Wow. It took 4 days. Wow. It's something you have to. It's almost like swing trading, but You, if you get it, you understand. There's one more thing I also wanted to share from my being off what I've been doing. Last thing I want to do is let me research our view. Last thing I want to do is let me do it on the Euro list. Is that you know when you start the day off, everything's looking good, then you just see a gap. You just see a gap in the beginning of the day, and you're just like, oh, why's there a gap there? It shows that something happened, right? So all you need to know is that that gap is gonna get closed because the charts don't like to leave space open. I wanna show you gaps. It's probably beyond the daily time frame. Okay, I think I saw yeah right here. So market closed on Friday. We opened on a new Sunday. We see this gap. Let me let me open it. Let me show you on Chrome what I mean by gap. We had some issues. I think on Chrome. Should come up right now. I want to bring out like a good definition, but it basically all that means is that price had a day off. It just show that oh there was a break in that moment. There was a break that no buying and selling, nobody was trading that day. So that's what I wanted to basically break down in my own terms. So right here, this gap, I'm gonna draw a circle for you. This space over here, this gap, it should be like about 30 pips, if I'm not mistaken. Gotta double that. One time over double. 60 pips. So 60 pips. So the market is obviously gonna go at the start of the open. It's gonna go 60 pips up. It might not go initially because when the New Zealand session opens, it opens around here. New Zealand session opens around here. So when it opens, it's just basically them trading, right? It's just gonna be them trading. So only them are trading, right? The market's not gonna be fast and open quickly. So they wait all the way until around 3 o'clock. Now the London session is open. It's open and it's ready to rock. Come back again 9 o'clock. New York session is open. And now New York and London session are at their peak because those are the times that they're at their peak, right? So that's how we see this big candle. You have to know the sessions, the gaps, and the time it's gonna take. So this is the 4 hour chart. If this was on 50 minute, it's gonna look a little bit crazy. Okay, here, see the gap. So basically, you just want to trade this gap. This gap means that it's gonna return to this downward phase before starting the weeks for work. Like the week's work is the economic news, the other news, but this is just technically it's gonna close that gap. So here at 7, New Zealand open, 7 o'clock, Asian session open, 3 o'clock in the morning, London session open. Let me draw a line to show you guys. I'm gonna quickly wrap this up. New Zealand. We have New Zealand. We have Asian. We have London. We have New York. And we have, I'm going to use another line for this. When the London and the New York session overlap, it's about 12 in the morning. I'm going to put a green around there. It might change because of daylight saving time, but usually on a hot day summer, it's going to be like this. So this this is what I want to point out. I want to point out that when these two sessions overlap, it's gonna be a problem. It's not gonna be a problem. Like it's gonna be a problem in your favor. So that's what I want to show you. It's gonna be a problem in your favor. So all you have to do is just make sure that you know the times you're supposed to trade. So if you have London and New York, you trade the GDP USD because that's when the volatility is gonna be as high as, and it's every day, 24 hours, 5 days a week, or 6 days a week. So at 12, you're gonna see the most volatility. This you're gonna see the most volatility. Just know that specific time that's when you expect the most volatility because it's two session trading at a large expense. So yeah, I see. So yeah, that's all you have to know about all the things I did within my research on. I just want to show you FOREX action and call it a day with your drawings. Oh, up in Max FOREX Factory. These are the sessions I'm talking about right here. We have 6 p.m. here. We see that Sydney session is gonna open. We see that. So in 5 p.m. our time, that's when the Sydney session is gonna open. 7 p.m. our time, that's when the Asian session opens. 3 a.m. our time, that's when the London session opens, and 5 p.m. No, at 8 a.m. that's when the New York session opens. So when these two overlap, right here, we can see they overlap between 8 a.m. to like 12 p.m. So that's the time that I'm supposed to be streaming, but I've just been caught up on different kind of stuff, and I apologize for that. So I'm just gonna probably do like 2 hours. No, sorry, like 30 minutes. Come in and just explain my analysis on the chart. Hopefully, we can get that done. Same thing with this. This only overlaps for like a good amount of time. So from 7, I want to say 7 p.m., 7 p.m. all the way to 2 a.m. They overlap. So there's no that it's gonna be big times. These only overlap for a little bit. They overlap for like an hour, an hour or so. So those are the two things that I need you guys to also understand. But yeah, thank you guys for tuning in today. I didn't trade. I just came back from my analysis, came back from my apology. Wait, I think I was showing. Was I showing it? Yeah, I was. Hopefully, I was. I don't know. I mean, I think I was showing it. Hopefully, I was. Let me quickly zoom back and see how I was showing this. I wasn't. Wow. I wasn't showing it. Wow. Easy enough. Hope you guys can. Okay. I was saying that this. I was saying that the Sydney session right here opens at like 5 p.m. Closes around here around 2 a.m. They overlap around 7 p.m. to like 2 a.m. So that's when the big training session, if you're in that time zone. Also from here, well, Tokyo and London only overlap for like an hour, 3 a.m. all the way to like 4 a.m. Our time is this is all Eastern Standard Time. So 8 a.m. all the way to 12 p.m. That's when the London and New York session. So I said that hopefully I can start trading at around 9 p.m. to see all the big moves I can catch in those times. And yeah, it's gonna be a good one. I want to thank you guys for tuning in today. Bringing me a blessing. Thank you for tuning in. Thank you for the two people that came to the kick and switch, respectively. Appreciate your effort and yeah, until next time. Thank you. Peace.